one thing which I always wanted to know, Reliance's mid and small cap fund has done extremely well. SBI Magnum, of course, we all know the fund has done well. Your, both micro fund and the small and mid cap fund have done well. And, Kotak also has the opportunities fund, which has done well. And I was just looking at some of the returns over the last 3 years or 5 years. All of them have given almost similar returns, or 27 to 28% kind of CAGR over a 3 or 5 year period. Do you guys look at each other's portfolio, or do you guys have a bit of a friendly competition among yourself, Navneet?
No, of course we look at everybody's portfolio. But I think as Rita was rightly saying a few minutes back, that in India, there's so much of opportunity to generate alpha and beat the benchmark, which I think most of us in the industry have been able to do over the last 30 years. This is our 30th anniversary, and then the whole industry has grown, and over a period of time, consistently across market cycles. And the reason is there are a lot of arbitrages. So you have a research arbitrage where, let's say, the large foreign investors who own 23% of the market, their universe is maybe, let's say, 100 stocks, and there's a large part of the universe which is not there. Or you put more resources, there's so much of inefficiency in the market, you can make more money. There's a time arbitrage. There'll be UP election result on 11th March, market will go up or go down. Donald Trump victory, Brexit, some or the other news flow, market goes up or goes down. If you have a longer term orientation, you can look at companies very, very differently. So there are those arbitrages still available, and for a long period of time, I think all of us who have invested in research resources, who have invested in processes, who have invested in right kind of people, would be able to generate that alpha for a long period to come.
Well, just for the record, let me place what Anuj has just said. DSP BlackRock Microcap Fund over the last 5 years has grown at a compounded annual rate of 30.5%. Reliance Small Cap Fund has grown at 29.85. I guess the difference is only which day we picked up these numbers. SBI Small and Mid Cap Fund has grown at 29.5%, and Kotak Emerging Market Equity Scheme growth has grown at 25.2%. So really very little to choose in terms of fund managers. I take your point on that. But Sunil, let me come to how you guys handle your business, because that's always interesting for those of us who watch you all. What do you look for in companies?
I think, I don't know whether I'll be able to answer that in such a short period of time, but I think very clearly, the basics are the same. You have to look at the business, you have to look at the potential, you have to look at the management. But I think somewhere down the line, you also have to look at what is already discounted in the price, and that is what equity investing is all about. So we are here to not buy the best company, we are here to buy the best stock. And there's a difference between buying the best company and buying the best stock. So sometimes, all the ingredients might be present, but the company might be priced to perfection. So we are here, as Navneet mentioned, we are here to buy the imperfection, whether it is the time imperfection, the thought process imperfection, the imperfection related to future outlook. And I think that is where, most of the money would be made. And frankly, specifically when you're touching upon the small and the mid-cap side, you don't have too many external resources to help you out. And that is where experience, being on the ground, having a team, having a process really, really helps. So it's a combination of a lot of things. But just one thing, we have to buy the best stock, not necessarily the best company.
Okay, buy the best stock. Before I toss it to Varinder, Nilesh, just one thing that I wanted to ask. Do fund managers also act out of impulse at times, news flashing and, reacting? Have you done that in the past?
So in my career, I would have done it many times. But over a period of time, you realize that it just doesn't make any sense. So now probably, we really don't watch day-to-day and minute-to-minute news as much. If FOMC meeting is there and I have to sleep, I will go to sleep. I can read it next day morning. It's perfectly fine. So impulsiveness is going away. But if impulsiveness can be correlated to gut, so is all your investment decisions backed by data and judgment? Yes, but there is always that gut also.
Give an example.
Let me talk about one of the newspaper company. When we invested in that company, our fund manager analyst had actually gone and visited how they were distributing newspaper, are vendors picking up the bundles or not? And we went and visited their factory and did everything. That stock became a 7-bagger in no time. And then one day, an outside analyst came and told that this company is actually reporting advertising revenue, which is more than what is being generated in that particular center. Your instant reaction was, oh, because you are owning so much of a stock, someone is trying to malign the reputation. Second, you went and checked with the management, and management gave their reply to convince you that no, everything is perfectly in order. It required a gut that if someone is telling you, there must be something, there must be some logic. So what we did was to pick up that newspaper for 10 days and measured how many advertisements were coming on an average. Based on that, we divided the revenue with number of advertising space. And we realized that this company is charging in a southern market more than what Times of India is charging in Mumbai. Now, it can be called data and judgment, or it could be called gut, that you respected someone's opinion and did your due diligence and analysis. And then we sold off that stock. We still get away with profit. And when we were selling, there were some mighty people who were buying on the opposite side, which again created self-doubt. Are you the only person who has done this kind of measurement? Aren't other people doing it? But we backed our decision, we backed our gut, we backed our analysis. And today, in the hindsight, that turned out to be a good decision.
And that stock fell 90% after that.
99% now.
Okay, I think we can make our guesses. Varinder?
Well, we can't, have a mutual fund discussion without Dhiren, okay? And he's one of the most well-known faces of the mutual fund industry. Dhiren, first of all, thank you so much for coming here, okay? A lot have been discussed on the mutual fund. What is your opinion? You have seen so many changes coming in, and the kind of numbers what we're talking about. How soon is it possible? What all needs to be done? Where do we stand now?
I make a living out of looking at mutual funds. And I've been doing it for 26 years. So I'm quite a vested interest. I don't have anything else to do, and I've not done. So, but that apart, I think, most variables are so nicely in place. Most other alternatives are so embarrassing. A country like India, where it's such a huge opportunity loss that mutual fund has taken so many years to take off. We have still scratched the surface. Look at the PPF outstanding. It's a recurring deposit on fixed income, which is nearly 2.5 times that of the equity mutual fund, which we have accumulated over the last 26 years. So, this mutual fund day, if it really takes off and, it becomes a habit, this is a phenomenal thing. I think this is the only thing it works. What was talked in earlier sessions that, mutual fund has been a seasonal investment. People have been investing temperamentally. They have been disappointed. People have invested, including Lata, to invest once and never come back again. I have seen 4 times. 1993, similar madness. Early 2000, most recent was the infrastructure. Maybe we are in the middle of it. But the big difference this time is that, it's not happening in a mad fashion, the way it used to happen. Anup has stopped taking money. It's not a very easy business decision. You exist in the business to raise money and manage it well. Managing it well, I think managing expectations, those things are really falling in place. And I think it's also a matter of the life cycle. Many mutual funds have learned through their own mistakes, what they did, what they learned, and how they are conducting now. So I think, this is just the beginning. We are in a state of infancy. We are in for something unthinkable if this momentum can be maintained at a certain pace, because there is nothing like, fixed income are on the decline. The kind of, it's an inevitable thing. And there's the only thing for which I come across a lot of happy customers. No other financial product, I can say. Of course, it could be in the private domain, limited circle, but there is not a single mass market product which has, which has the potential or has the moral courage or authority to go and say with your head high that come invest and make money.
So what's the kind of advice you will give to people who are sitting here and watching you? what should one do even after whatever the market levels are right now? And what are things they should stay away if they have to invest in the mutual funds?
Markets are always like that. You have no control on anything except your plan. So you know how much you make, you know how much you can save, and all that you need in 2-3 years, don't invest in equity fund. Rest of the money, make it a habit. And if you are watching the market, you'll never invest, or you'll always invest at the wrong time. So get going.
Okay. I am tempted to ask you this thing. How much CAGR have you made investing in mutual funds since the longest of the times? Because I just want to compare them with all these fund managers who are sitting here.
I would like to just put some and clarify some of the context that we have been referring to, because undoubtedly mutual funds have been remarkable. But this new phenomenon, your ability to invest regularly, this became popular 5-7 years back. Till early 2000, it was not possible. But I would say that I have been, I have been only investing in mutual fund. And my CAGR annualized return on my investment, because earlier I always used to make the tax-saving investment. And some of these funds, I can name some. They're upward of 25% annualized. But the compounding over 25 years is something which actually I come from such a background that I really feel being well off,
Well, congratulations. 25% CAGR is not a small mean by any standards.
Oh, yes, and over a 25-year period. So that's a lot of money. Okay.
And from mutual funds.
And from mutual funds.
And through all the embarrassing times.
Exactly. And
a round of applause to the fund managers.
And tax-free.